Kia ora koutou and welcome to Markets, Mystics and Mayhem, a weekly podcast with Kiwibank's economics team alongside the occasional special guest. We'll delve into the data, decipher policy decisions, monitor the markets and analyse the issues impacting the Kiwi economy. Let's get into it. Kia ora and welcome to Markets, Mystics and Mayhem. This week, we've got some good news. We've got some very good news that we want to share with you, and that is the cost of living crisis is coming to an end. Interest rates are falling, and this time next year is going to be a much, much better year. So MJ, what was the cost of living crisis?
Yeah, well, the cost of living crisis, we define it as a time when, wage growth isn't keeping pace with the growth in consumer prices. And that's what we've seen over the last 3 years. We've just seen inflation skyrocket to, 7.3%. It's been falling, but, still at levels above wage growth. But with the latest inflation number down to 2.2, we're actually seeing the end of the cost of living crisis.
Yeah, so good news, right? Your pay is rising or will rise faster than inflation. So it'll take some time, but I think you'll feel, and households will feel, that they're getting on top of things again, and I think by this time next year, we'll be a lot more confident and our budgets will be, in a better shape.
Yeah, because not only is inflation coming off, but we've got interest rates falling as well. And next year, we should see house prices start to appreciate. And those things have been going in the other direction, just, exacerbating that cost of living crisis last year. But we're seeing this turnaround now, which I think next year everyone will feel a bit more optimistic about things and also in a much better, financial position as well.
Yeah, so good news. One of the things I'm hearing is as soon as interest rates are being cut, people come to me and say, what does that mean for inflation? Like, is inflation going to bounce back? And is it back in its box now? I mean, what is happening with inflation and what do we expect?
Yeah, well, now we've seen inflation at 2.2%. That is back within the Reserve Bank's band of 1% to 3%. And it's been outside of that band for more than 3 years. So we're back within the band, which is all good news. And what that means for the Reserve Bank is that now that their inflation target is pretty much achieved, they can start to lower interest rates, which they've already done. They delivered a 25 basis point cut in August and then a 50 basis point in October. And we're expecting more, reductions of the cash rate to come because we've seen their inflation mandate pretty much achieved.
So pretty much achieved, but, what did it take to get there? What has happened, scratch beneath the surface here on inflation? What's going on?
Yeah, well, the reason why we've seen inflation fall back from 7.3 to 2.2% is mostly a tradable story. So in imported inflation, we saw some really rapid deceleration in that place. Oil prices have come off. They fell 7% over the quarter. Shipping costs have obviously normalized as well. So that has done most of the Kiwi work in reducing inflation and getting us back within the band. But there are still some sticky points out there with domestic inflation particularly. That's still running quite hot. It is coming off and it is softening a little bit more than we expected. But that's to be expected when you've got, interest rates still restrictive and that's still weakening domestic demand. So we've seen the decline in inflation or disinflation is mostly a tradable story, but to be sustained at 2%, it's largely a domestic inflation story.
Yeah, so there's two phases to this return to 2%. First phase is a global one, right? Inflation globally has peaked and has moved pretty much back to 2 to 3%. So that's great. I mean, that's happened in the US, Europe, Asia. Inflation has been tamed globally. We're seeing that through the imported prices. But the harder stuff is the domestic inflation, right? And there are some sticky points out there. Council rates being ratcheted higher with a desperate need for more infrastructure. Pharmaceutical prices, subscriptions, premiums.
Insurance premiums.
Yeah. I mean, there are a lot of things that are still hurting. But the good news is that, what's happening with that basket?
Yeah, the CPI basket. Of the basket, much fewer items are recording an increase in price now. And actually more items now are either having no change in price or actually decreasing in price. So that is telling you that this cooling in inflation pressure is becoming quite broad-based, and it's a much more, generalized cooling in inflationary pressure, which is good news.
And core inflation?
Core inflation, if you strip out, volatile price movements and things like food and energy prices, that also is in a downward trajectory. We're down at 3.1%, so just skimming the top of the Reserve Bank's target band as well. So that just continues to fall. It'll be in the band, next quarter, which again is just good news. We're seeing this broad-based, generalized cooling in inflation.
And why do we like core inflation? Why do we focus on core?
It tells you the sort of underlying trend in inflationary pressures, because you can see oil prices up and down, on a quarterly basis. Shipping costs can be up and down, but these are sort of relative price shocks, and they're quite temporary. And you look through these typically. And that's why underlying inflation is really the measure to be looking at. And that's been good news.
Yeah, been good news. So the Reserve Bank, they must be sitting there saying, thank God, right? Thank to the gods of central banking. We did get inflation back, within the bands and pretty close to the 2% midpoint, right? Job done. What are they going to do from here?
I think they're just going to continue cutting interest rates. We've always said that once they decide to cut interest rates, it's a decision to get back to neutral. And so that's where we see interest rates headed. We're expecting another 50 basis point cut in November. And then just, just more 25 basis point cut next year to get back to that neutral cash rate of around 2.75%.
Yeah. And again, good news, right? So for households over the last few years who'd faced a cost of living crisis, which is coming to an end, interest rates coming off. With the fall in interest rates, we're expecting house prices to not only stabilise, but actually increase, 5 to 7% next year. So I think we can put the stake in the ground and say recession finished, growth next year. It is an optimistic story. And if we're to have this chat, this time next year, I think we would be saying, the economy is running at 2 to 3% growth, which is great. Inflation is still at 2%. House prices are up 5, 7%. We've rebalanced, we've recovered, and, moving into 2026. Yeah, happy days.
Happy days.
We just want to delve into one more area on inflation, which is important, and that's rents. We've seen rents rise quite rapidly over the last year and a half, mostly on the back of a migration boom. And it is an area of concern because for those renting, obviously it hurts. And we need to think about how do we get rents back under control and, what we can do in the housing market. So, MJ, what have rents done recently and what's been the driver?
Yeah, well, rents, they're running at, 4.5%, which is high above the pre-COVID rates of around 3%. And that's important because it makes up a large part of the CPI basket. It's something like 9% of the CPI basket. So that's been a really strong domestic inflation pressure. And rising rents have really been driven by migration. So we had this big migration boom in 2023. Lots of people came into the country. And with more people to your population, that just means more demand, and more demand for housing was a big one. So that's been a really big driver of the rise in rents.
Yeah. And it's symptomatic of some serious problems in our housing market, right? Inexcusable problems, if you ask me. So we love a migration boom. We love, more rapid population growth. Good for the economy, good for New Zealand. But we don't love investing for our population. And we're hopeless at maintaining the infrastructure that we have. So we find ourselves in a situation where our population grows at quite a rapid rate and we just don't keep up. We don't keep up on the infrastructure, health, education, you name it. We struggle And if I was to say, what's the problem with the housing market? Well, it is the fact that we've underinvested in infrastructure, but it is the lack of supply, right? The lack of supply of housing in this country, that's the problem. What do you think?
Yeah, it is, because, long-term migration is a net positive for the economy, for economic growth. It's just your ability to service that increase in demand when they come in waves. And the last migration boom and the consequences we're seeing now of it just shows that we couldn't keep up with the population increase. And it is an infrastructure problem. It's a supply side problem. And we're seeing that through higher rents.
Yeah, exactly. So higher rents, not good for lower income households. The affordability of housing in this country is a massive restraint for many who want to get on the property ladder. Unfortunately, a lot of policymakers talk about demand and they focus on demand. But what we desperately need our politicians and others to do is to come up with ways to supply affordable housing. I reckon if you build, 100,000 affordable homes for less than 700,000 or 500,000 each, a lot of that problem evaporates, right?
Yeah.
But, is it achievable? I mean, do we have to reinvent the wheel here?
I think you just have to look overseas. Plenty of case studies where they're doing things like modular housing and all that. We just need to be able to do that. The problem is we need to do that at scale. And, we've got issues with, cost of materials and cost of labor that kind of inhibits that progress. But it's not impossible to do.
Yeah. The problem is that we've got some great builders out there, but we need to get them together. We need to scale them together. And the way to do that is to say, we're going to build, a large number of homes over 5-10 years. Here's a contract, go do it for 10 years. And you'll see people pooling their resources and, delivering on these ambitious targets. We've just got to get the right minds in the right room with the right setup. So that's it from us for another week on Markets, Mystics and Mayhem. We've covered a few things today: cost of living crisis, inflation. We've also talked about the housing market. I hope you've enjoyed it. I hope you tune in again. Please like, follow, subscribe, do all that stuff. And we'll be back next week with more insights. But for now, we're done. You've been tuned into This is Kiwi Economics, Markets, Mystics and Mayhem. We'll be back next week for more analysis and insights.